Good morning. Today is July the 6th. The time right now in Singapore is 8 minutes past 7 in the morning. And we are going to talk a little bit about currency markets today. And overnight markets were pretty quiet across the board. Maybe because most traders are still not back at a trading desk after the US Independence holiday on Tuesday. And partly also because the market was also waiting to see the minutes of the FOMC meeting held in June last month. Almost all voting governors has actually voted to skip the interest rates hike in June, as we know by now, but they are leaving the door open for further rate hikes for the balance of the year, beginning this month on July 26th, when they are holding a two-day meeting over 25th and 26th of July, and market really expecting the Federal Reserve to actually hike another quarter point or 25 basis point going into this month's FOMC meeting. So the market is pretty quiet, but today what we're going to talk about is the dollar versus the yen. And we all know dollar yen actually has gone up to 145, a very sensitive level, because last autumn we saw the Bank of Japan that came into the market to intervene by selling the dollar, buying the yen, and that caused the dollar yen rate to go down drastically. So right now we are back to that same level of 145, and the market is getting a little bit nervous. We can see that the market over the last 72 hours since last Friday closing at 145, we can see the market is basically trading gingerly. Prices has not really gone up or down very much. It's still holding the line. There are two opposing forces here. One is the fear of a Bank of Japan intervention around 145 to 150 area. The other is, of course, the expectation is that the Federal Reserve is going to hike rates going into the July FOMC meeting. So we have two opposing forces here. Now we're going to see which force actually wins out towards the end. But the fear of intervention is very real, and I'm of the opinion that the market would not want to take the chance to take their dollar yen rate much higher beyond 145. So this does actually create a selling opportunity if you have the stomach to do counter trend, because the last move was actually dramatic. So just remember that at 145, near 145, the market is actually quite vulnerable. The area to do any kind of trade, in my opinion, is between 144.66 to 144.84. So it's a very small window if the price to get into that level, which it has over the last 72 hours. Do watch out for the ability to go counter trend. That's all I have for you for today. I'll come back to you tomorrow with another update. Bye-bye. Take care.